Money!
What Your Bank Doesn't Tell You, a podcast by You Mushroom.
Hello everybody and welcome back to our podcast, What Your Bank Doesn't Tell You. As for today's topic, nobody tells you how to deal with fear when it comes to investing.
Absolutely. Hello also from my side, and I can tell a story about all these topics around fear and investing.
And maybe you have been wondering whether you're actually the only person with a big respect or even fear when it comes to investing. But we can tell you that even we as professionals, we actually dealt with the very same fears.
I remember my start in investing, and you should imagine after almost 20 years in banking, one would think, oh wow, that should be a walk in the park. For you? Recently, a friend of mine asked me, and she was like, you have certainly invested since 20 years. I was like, yeah, actually, yes, because we used to get stocks of the banks where we used to work for. And I remember I also invested in structured products. Back then, the so-called barrier reverse convertible on indices, they were good. But other than that, systematic, really thought through investing. It was not on my radar, to be honest.
I remember recently when we had lunch, and we, as you know, we have usually our team lunches on Monday, and you were explaining that actually you had quite big fears to get started when it comes to investing. And for me, this was extremely surprising because I know you as a professional for so many years. I mean, you worked on the trading floor, you worked in investment advisory, you have seen it all. But still, it's a difference when it comes to the application for your own money somehow. And I'm very intrigued to get to hear more how you dealt with this situation. And I can also already reveal now that we will share with you some steps how to deal with that fear at the end of this podcast.
Oh, thank you. Absolutely. And to me, what was very surprising is that the moment we exited banking and decided to start starting our own company was also a period where my personal life was changing substantially. And reality is that today 50% of the marriages fail. So I was in a situation where my marriage was over and I had to take responsibility for myself, for kids, and also starting a company. And it's very interesting what does that with one psychologically. Mm-hmm. Even though in theory you have exactly the same type of knowledge, you would know that I had the skills how to start. There was such a psychological barrier, almost like a terror barrier, to really take a certain amount of money and really put it in a stock. And I think a lot of us, no matter how experienced and knowledgeable we are, I think fear sits really in the reptile brain. It's something very original in us and blocks us.
Dig into this. So what was your fear? To lose all the money or to be poor at the end? Or
my fear actually ultimately started with the fear of loss. Mm-hmm. I digged into that. I started analyzing and I actually keep a diary how I deal every day with fears and how I deal with how do I take investment decisions, because it kind of disciplines me and I would warmly recommend that to everyone. But I remember it was 2020, it was prior to Corona. And I remember, actually Corona just started and I remember, this dip reminds me of 2009, when literally all indices were after the crisis. I should buy. And I said, but maybe I should wait. And I remember the fear observing some of the tech stocks. For those of you who follow our podcast, you know I'm very passionate about tech stocks. And I remember, for example, Netflix is one such case, which in the meantime is 4 times of what it cost back then in 2020. Apple, all the big ones, the Magnificent Seven, S&P 500, everything, particularly America. I remember I was watching and I was like, meh. And then I'm like, And then you start being, and what hack number 1, which I had to take out of my thinking, was when I observed the movements, I would observe day by day. And day by day, stocks are very volatile. There is a lot of noise in the press, spreading the feeling back then that it was the end of the world and it was a tough period. But that makes something psychologically with someone. And I forgot to think of what I knew about the long-term trends, because it mixed with economic interference, it mixed with my personal situation as a, being on my own with the kids and starting a company. All those factors actually, in addition to what was happening out there on the markets, blocked me.
So if I get you correctly, then your emotions about the short-term potential losses were bigger than your know-how that in the long term,
Absolutely.
Actually stock markets tend to go up given our economic system.
Absolutely. And what is very interesting is I realized several talks which we used to have back then in banking. For those of you who listened to our podcast, the longest bull period was from 2008 until 2020 on the stock markets. It ended 2020 with Corona. Now we are again in third year. But I don't even recall in banking that we were so much focused on cycles, actually. Because banks typically don't profit from buy and hold strategies, actually. And this is where the big money comes from. People should invest systematically. People should look at the long-term trends if they really want to build long-term wealth. And a simple matter of fact is that you lose money if you're not invested. It actually doesn't matter when you get into.
I 100%, yeah, sure. I 100% agree with you. But you are also touching a very important topic, and this is the short-term trends, or basically the volatility, the risk, the short-term movements.
The moods.
And the moods, exactly. But I also came, for me, to the conclusion that, yes, the trend is your friend. But volatility is usually considered as your enemy. But you should turn this enemy into your friend or even buddy, because if you know how to deal with volatility, how to deal with risk, then you're always or typically better off. Because if everybody loses the patience or gets very nervous, everybody's selling, this is usually also a good starting point to build up a position or to increase a position. But on the other side, if markets are diving and you are already invested, then it's also usually just good to stick to it.
And, sit on it.
And basically...
And watch the show.
Exactly, watch the show and trust in your body, in the volatility or in the markets that they will, at a certain point in time, also turn again.
Yes, and to come back to the behavioral aspect, which I think is the most important one, and this is where we always fall prey of our own irrationalities and fears. What I realized, and this is step number one, which I would warmly recommend to anyone out there, become aware of what stops you. Because the moment you become aware of what stops you, and the best way is journaling, as silly as it sounds, take 5 minutes per day, write why didn't you invest today, or why didn't you set up an investment plan, or why do you postpone the topic of investing? The more you really stick with your fears, don't push them away, don't say I'll do it tomorrow, because this is procrastinating. And in German there is a beautiful expression, we call it Verschieberitis, and it's exactly that. You kind of push it away. Step number one, become aware, write it down. That's already 50% of the work. This is what I did.
Tell me, Luba, I mean, you're saying journaling, and I know how you invest today, and in some instances, I wouldn't even call it investing. You go into trading as well. So you're very, very active in the markets. So how did you bridge from being fearful to being an active investor or even trader? Was it just the journaling, or was there something in between as well? Between the journaling and where you stand today?
So step number one was journaling. And it's an excellent question. Thank you for that. It was a long journey. Step number two was really to start with amounts which I was ready to lose no matter what. Because if you invest, and what you need to do is to really start with amounts which you're ready to lose. And it doesn't matter at that stage whether you're investing long-term or whether you're investing short-term. And back then I remember I was feeling like literally a beginner because my financial situation has changed. Mentally, de facto, nothing has changed. We have income, we're professionals. But this is what happens with all of us who actually go through substantial life changes. Doesn't matter what it is. It could be anything else. People lose jobs, people go through divorces, people move to countries, people decide to change actually their occupation. Those are major changes. So if you go through something like that, you're actually pushed back emotionally in the situation of a beginner in terms of behavioral finance. And the best thing to do is to actually first start with an amount which you're ready to lose and observe. Buy time. The more you lead this inner dialogue, the more you get into the confidence. And then you can move to step number 3. So first journaling, second, start with an amount which you're ready to lose. And step number 3 is make yourself a plan. Because if you're disciplined, and you know I'm a big fan of discipline, not with food, but generally in terms of work.
You are, come on.
In terms of work environment, etc. The key for me to make wealth is to be disciplined. There's no other word for me.
And in respect to discipline, I believe, this word includes various aspects. For me, discipline, the first thing is only invest in what you know and what you understand.
Absolutely.
Just because somebody told you that this and that might be a super investment, don't do it. Just invest in what you really understand. And then second, what counts under discipline for me as well is diversification. So diversification in the sense that I don't put everything just on one horse. I diversify, I go in an index or not just one company. And the other aspect of diversification is over time. So don't invest your money at one point in time, but maybe stagger your amount over a period of time in order to avoid the risk of the price of one single day. And this, for me, is also an aspect of discipline or having a plan. And for me, this is extremely important as well.
Absolutely. And those are aspects how you actually address the fears. The fear of missing out. The fear that I remember these talks which we used to have, and we had actually identical talks with clients almost in this sense. 2011, no, the markets are up too much. They're going to go back. 2012, the markets are up again. And then fast forward 5 years later or so, or 8 years later, the markets are long-term still up and no one is invested. And this is exactly what you're saying. Discipline includes be diversified, because long-term diversified markets grow. And the second is very important what you say, and this is one of the major psychological hacks which we need to overcome is we think that there is the perfect moment. This is like so into human nature. Now's the moment or never. No. There is no perfect moment.
And when there was the perfect moment, because markets are diving, then nobody has usually the courage to really get in. And this is what I meant before with make volatility your body and not your enemy.
Absolutely. Absolutely. And I remember we were discussing this, and it's a very beautiful quote, make volatility your friend, not your enemy. I remember in August when markets were dipping. Back then, we were so happy after experience, after, sitting and watching the show and saying, shall I buy even more? And those are changes which happen with someone. And another thing which I would add to discipline is actually also be very mindful. Are you investing long-term or are you investing for fun? We have in our investment buckets a long-term bucket where we invest. This is our saving plans or our which currently you can do easily in Switzerland with various providers. When the two of us started working, there was no such thing as a saving plan. Now we have it. Luckily, you can start with 5 francs. You don't have to put 10,000 francs. Understandable, to deal with the fear of losing now is much easier because back then, 10,000 Swiss francs as a minimum so that the trading costs make sense. It's a different number. But also what I mean with discipline, in addition to the points which you validly raised, is be mindful. For example, if you invest long-term, split it, as you say, long-term, ETFs in broad diversified markets. But if you invest short-term to capture on trends, be very mindful what you invest with. I'm, for example, as you know, I think poor team, they listen day in, day out about that. I'm very passionate about quantum computing stocks. And same for artificial intelligence, and artificial intelligence relatively early. The mentality which I adopted, but it was after several mistakes, was to say, I invest no matter what. And no matter what's written in the press, I do my own due diligence, I trust my own instincts, because there is a lot of different opinions, there is a lot of different interests. It's worth reading them, it's worth listening to them, but at the end of the day, it's essential to trust your own instinct. And to tell yourself, do I invest this to capture an opportunistic trade profit for, I don't know, 2-3 weeks? Or do I invest because I think in the next 2-3 years, one of those quantum stocks is going to be the next NVIDIA? This is very important questions which you need to, this that inner dialogue you need to lead with yourself.
I fully agree. And I have a similar experience with investing into alternative health care stocks. And in the end, it's all about conviction, right? I mean, one of the companies I invested, they are at the moment also substantially down. But I'm so convinced in the long-term story, so it helps me a lot just to stick to it. But this again comes back to the topic: you always have to understand in what you invest. So, long story short, you're not the only one if you're afraid of investing, but there are ways to overcome these fears. So, step number 1, be aware why you are afraid. Do the journaling as Luba did. Then, second, only invest the amount of money you are prepared to lose or you don't need in the short term. And then third, very big topic, discipline. And discipline in the sense that only invest in what you understand and diversify. Diversify among different companies, markets, and diversify also over time.
And can I say my favorite quote?
Go on.
I have a favorite quote, which is from a movie, and it's very cheesy, but I really love it. And it's, for those of you who've watched the movie, I'm sure you're going to know it. It says, never let the fear of striking out keep you from playing the game. And this for me is essential.
Beautiful. Very nice, very nice. But Luba, before we end this podcast, I also have 3 random questions to you today to get to know you a bit better.
There you go.
Some of the questions you have already answered a bit during our talk, but still, we go through them. First one, steak or broccoli?
Broccoli.
Well, in your case, it might be rather beetroot, but...
That's true. In my case, it's beetroot. A lot of it.
Then second, are you an owl or an early bird?
Ooh, an early bird. But I became an owl.
Because of your boyfriend.
Because of 3 men at my house, the kids and my partner. Yes.
Lucky you. Then third question, tech stocks or luxury stocks?
Oh, tech stocks.
Okay, that was a very clear one. So thank you very much for sharing your very personal insights. And we are very much looking forward to the next podcast. And there are more secrets to be revealed. Thank you very much and talk to you soon.
Thank you also from my side, and very much looking forward to see you next time. And next time is going to be the other way around. Tonia, be prepared. I know she's looking forward to.
Money! What Your Bank Doesn't Tell You, a podcast by You Mushroom.